Hey guys, this is Market Update. The economic data is starting to roll over, get a little bit weak. And this is important for our crypto bags because what the Fed decides to do here is going to massively affect what our crypto is worth. So I want to go through that in this video because you see all this data, we'll go through it. It's soft, it's missing expectations. Previous data is all getting revised lower, showing a fairly weak economy in the States. Now that's what the Fed wanted. That's what they wanted to slow things down and get inflation down. But if they wait too long, then it's going to be one of those classic sell-offs. The market crashes where they have to come in and save the day. Now, this is volatility. And so if you have leverage positions, you have to be aware of this. If you're holding spot, then you can just wait for the inevitable bailout that occurs. But it's really important to pay attention right now because we're at the turn in the cycle. And what the Fed decides to do here, how long they wait to actually cut, because they probably need to, is going to really affect volatility short term and prices. Remember what happened in the last bull market? Huge bull market that everyone remembers. But do you remember that the price literally crashed 60, 70% within like a week, right? Sitting on that is not great. And then the resulting bailout goes to a new all-time high. But if you're in leverage positions or whatever short term, that is not good to get through. So let's have a look at what the data is showing us, short term and long term. So short term, the market's obviously waiting for the turn from the Fed, right? So they think right now, because we're at all-time highs. Yeah, we've had the ETF, which has pushed us up here as well. But the market is comfortably trading Bitcoin at 68,000. Probably expecting the Fed to be a little bit softer, soft economic conditions, softer Fed, generally good for asset prices. If the Fed just wait and bury their heads in the sand, which actually is what Jerome Powell's done pretty much at the turn of every cycle, then things could go wrong. So we have to be aware of that. Things could be unexpected. Some hedge fund or private equity, private debt issuer goes bust, something like that. That's obviously not good short term. However, I believe the Fed's reaction is bailout, which means currency debasement, which means Bitcoin all-time highs. At the end of this video, I'll show you why that happens in terms of global money supply and Bitcoin. But for right here, I still think the bull market has a long way to go. Ultimately, moving up to this blue line at some time within the next 12 months. Volatility potentially short term. Ultimately, I do think we get up here at some point because the economy is soft in the States, and that means they need to be a little bit more dovish, the central bank. And that means currency debasement. It means more currency units in circulation, which pushes the price of scarce assets up like BTC. So that is what I'm trading and holding out for in this bull market. If you do trade, check out the Bybit deposit bonus. I trade on here. Click the link, deposit, you can get up to $30,000 as a deposit and trading bonus. Many will say that the inflation data is just still too high, but we know that the inflation data is cherry-picked, hand-picked data from the Fed to have absolutely zero relevance to actual inflation, which is the rise in price of desirable products and services, energy, food, education, healthcare, and assets like housing and stock market. Bitcoin, one of those. All-time high. It's suggesting that the Fed needs to flip or has flipped essentially, but the media is still portraying a very, gung-ho Fed saying we don't need to cut rates, the economy is strong. Well, the data is starting to fall to bits now. And the real problem is that the Fed has to keep the show on the road. The fiat currency system cannot be allowed to deflate. If GDP deflates, then asset prices deflate, then you get panic, because the panic is a fear, a rational fear that the system is pumped up and is the wrong price. Everything is priced wrong because money pumped in to keep prices of assets high, mostly housing, because that collapsed. The debt on top of it collapsed. Can't have it collapse, right? So the price of everything is wrong. It's not free market and it must be kept above water. Right. And so this is why everyone gets panicked, because the money's not there in the system. It's just not there. Right. There's debt on collateral price falls. The money's not there. It's gone. So you have to keep the show on the road, which is where the panic comes from, because people are not confident in what the Fed is going to do. The Fed is still saying we don't need to cut, but the economic data is starting to come in a little bit weak. And that's where uncertainty comes in, which means volatility to the downside in risk assets if people don't believe the Fed is going to bail them out and create a huge deflationary collapse. So this is the important time. The next few months is absolutely vital. Are the Fed actually going to give in and say, look, we need to cut now, just need to keep the show on the road a little bit, asset prices go to the moon? If they are head in sand, there's going to be a deflationary collapse, but then they have to bail it out again. So we hope the first one, but the second one is a possibility. You can see here the data coming in soft, right? Core PCE 3.6, forecast 3.7, home sales minus 7%. You've got PCE prices 3.3% coming in soft. Many will say, hey, look, inflation is still too high, but this cherry pick data is very, very slow and sluggish. They do that because when it moves to the upside, they can keep pretending that inflation is low, this cherry pick data, even though asset price inflation is off the charts, right? It works to the downside though as well, where this is going to keep deflating, even though the market has sniffed out that the Fed has to change course and be more dovish. Bitcoin is the signal, risk assets are the signal. And all of this data is cherry picked and sluggish and looking at 6, 8, 12 months behind. So the Fed is going to pivot at some point. Hopefully it's a soft landing and they don't wait till panic sets in. This is the FT, just saying that essentially this is a mouthpiece telling us now what the Bank of England wants us to think. The Bank of England has flipped, right? It was not supposed to happen. Shrinking of the balance sheet needs to stop. So China has flipped, Euro has flipped, Bank of England has flipped. When is the Fed going to do that? This is the cyclical component of GDP. It's coming in soft again, right? So this is what the Fed wanted. They wanted a little bit softer market, so this is fine. But if they keep on too long, it's very clear that GDP isn't going to remain robust, even with all the government spending. And that means deflationary bust within markets. Everyone says, why is my house worth this much? I can't afford the debt, and everything collapsed. So we can't have that collapse, right? The Fed can't let that happen. It's going to be very volatile if they do. GDP, you can see it coming in lowest level since Q2 2022, 1.2. It's below target already, right? So the GDP can't be allowed to collapse. The government can't let it collapse because everything then collapses. So that is the issue that could happen short term. So we need that not to happen. We need the Fed to sort things out maybe and say, look, inflation's coming down. We're going to be a bit more dovish. So we typically wait until after GDP collapses and then we panic cut and claim nobody could have seen it coming, right? This is just a comment on how the Fed reacts, right? We can't have that to happen. Huge deflationary bust. So we need them to actually come a bit dovish now. But Jerome Powell and the Fed seems to be very late at everything they do. So this is the worry short term, right? So time to pay attention. With all the talk about the fiscal deficit and how much the government is spending and pouring stimulus into the economy, it is increasingly difficult to use that stimulus to raise GDP. GDP has to keep going higher, right? They have to keep the balloon inflating. They can't let the collapse happen. So there's two ways to do that. Spend money on the government side. So you steal from savers, right? You issue bonds, steal cash from them, pump it into the economy, pay an interest rate. Or the central bank prints money, buys government debt, forces rates lower, prices up, same sort of thing, trying to force stimulus into the economy. Both sides of it, all the underlying aim is just to keep GDP up. The problem is that it's ever and ever harder to do that. So this is the amount spent in federal debt and deficit in red versus the increase that gets in nominal GDP, right? So it's not working out here, right? If you have to create more debt, you create less GDP, that's just not going to work out. It's fundamentally broken. New debt required to generate $1 of GDP growth, you're looking at higher amounts, right? $3, $7, $4, $8. Not a good look, right? The maths doesn't work out, right? You just create ever more debt to create basically nothing in GDP, but you have to keep the GDP higher, right? So you can either do it from the government side or you can do it from the central bank side, but they have to keep GDP higher and it's coming down, which means we must have more stimulus. Absolutely must have more stimulus to keep the show on the road. So what does that mean for asset prices? You can see here that this is a headline. I'm not sure if this is exactly true, but it serves a point. 7.5 billion in federal funds yields only 8 EV charging stations. I'm not sure if this is specifically true or not, but the point here is that the government's job really isn't to be a private enterprise and actually create anything for the economy. Their job, the number one job, is just to push stimulus into the economy to keep GDP high. And whether charging stations are made or not is actually irrelevant. The actual goal is to make sure that GDP, with any amount of debt or money printing, remains above zero. It has to remain above zero, otherwise deflationary collapse. This is core PCE. So we're worried about core PCE and it needs to come down. It never goes down. They don't let it go down, right? Has to remain high. So they have to keep pushing stimulus into the economy. This is M2, global M2, and potentially breaking out into new all-time highs. So remember, the fiat system is an expanding balloon that must be kept expanding. And we had a deflationary event during the last bear market. You get them every 4 years as they try to rein in inflation and keep things going in a straight line. They can't have this huge expansion, right? Like Argentina or Turkey or somewhere like that, right? They have to keep things tight within a range. That's why they have these policies. But very clearly, you can see what is potentially happening here, which is a huge breakout of M2, because we're seeing the data now come in where the deflation happened. Well, you can't let that carry on forever. So the next part of the cycle is, hey, we need more stimulus. So you can see that Bitcoin reacts around these major points in M2 supply. M2 is money supply from the States, Eurozone, China, Japan, others here. So this inflection, right? This was the Bitcoin bear market, previous bear market. You saw this M2 supply kind of staying flat and sluggish, right? But as it inflects to the upside, that is the previous bull market for BTC, right? So you get the inflection here, right? You get the low in M2 and then the inflection to the upside on the left-hand side. On the right-hand side, that is the inflection point for the last bull market, right? So the bear market low right here on the right-hand side with Bitcoin coming up into, the new bull market. Then towards the end of last cycle, where the M2 growth eventually turns over because inflation is way, way too high. So M2 growth eventually stalls out. And you can see Bitcoin just prices that in around the same time as well. Right now, Bitcoin is forward looking here. So, I remember when the Fed said, look, we're done. Actually, M2 was still going up, but the market said, look, inflation's like 10%. You have to rein it in. And so that's the last bear market. You can see here as M2 goes down, you can see very clearly Bitcoin reacts to that, and that's the bear market. But this inflection here as well, where M2 comes off and then reacts again to the upside. Bank term funding program, everything's starting to collapse in the banks. M2 reverses. You had China starting to ease as well. That was the inflection point right here. Inflection point of drawdown into expansion again. That was the end of the bear market for Bitcoin, literally the exact same time, moving higher again. We are now starting to get a potential breakout of M2. So if these are correlated, all we have to ask ourselves, if we can hold BTC through volatility in the short term, if we can hold for like a couple of cycles, is M2 going to go higher over the long term? So the answer is yes, it has to, because the fiat currency system is an expanding balloon, and it has to be kept expanding. So if these are correlated, you just ask yourself, is M2 going to continue to rise in higher highs and higher lows over time? The answer seemingly is yes, according to this chart. Ultimately, what I think the data shows for an individual investor is that they have to keep GDP higher, and it's not higher by itself. So they have to debase the currency. They either push stimulus in from the fiscal side, stealing from savers, or they print money, which is also stealing from everyone through asset price inflation. So you can't be in that currency. You have to defend yourself in housing, stock market, or Bitcoin. Bitcoin is the best performing. It has the most fundamental growth out of those things. But it's a tool in the toolbox that we have to defend ourselves from very clearly what has to happen, which is debasement of fiat currency. That's how a system is designed. So it's one tool in the box that we have. If you do trade, check out Bybit, deposit bonus down below. I'm going to be updating the crypto investor course over the next month with just some strategy going into the next year, because it's an important year. Typically, the bull market year for Bitcoin is, the 12 months after the halving, which is this. So really important, and some big updates I'll be making for crypto course members there. I'll link that down below as well in the description. I'm James with ManagerG. Cheers for watching, and I'll see you in the next one.